Good evening, Nick Inman from VolumeProfileTrader.com. On Thursday, August 16th, the market finally gave us something to be excited about, which was just the fact that it broke out of this little range here and gave you some higher prices. And it only took 6-7 days to see some type of range extension. I was anticipating a potential top. But you looked at yesterday, and I think I mentioned this, that trendline support, it continues to hold, and until it doesn't, you'd have to expect the next test would be the top end of this channel, about 412 or so. It did that, it overlapped it. So this channel's kind of busted, but I think in general, you're kind of looking at this slope right here. One thing to say is, you have to look out for a potential blow off top, and with that it would just be maybe another day or so of higher prices and then some type of reversal. Maybe we don't get higher prices, but I think that's something to look at, because the market, although it could, because it did it back here and it did it 2 years ago, it has a tendency to just do this trickle up effect, and it lasts for a while, and the first major pullback, which was back here in March, for example, ends up being a buying opportunity. So I don't know if this is the same thing, but what I do know is the market still looks good from the long side. So let's get into other names. NASDAQ, just to show you, continues to push higher, almost at new highs for the year. The Dow looks like it's about to make new highs, and the Russell, I know this is lagging some. But this actually looks pretty strong. This pattern ended up working out. We have resistance. Let me get rid of these drawings. All right, we have resistance here, and this just broad trendline resistance. We have a double bottom, a reversal. We maintain these levels on the upside. We come back, test. They can't push it down, and now we're basically working off this point of control for the year, which you can see, it almost looks like what the S&P did a couple of months ago, basically like right around here, maybe a month ago. So it's still lagging, but I think that you can just keep note of that. Volatility index, I just continue to say watch it. Just be aware that, remember, the last time we were down here, and I think this is important to realize, is you had 4, up days here, and, this wasn't an up day, but the VIX closed higher than where it opened. And I think that's important. Right now we don't have that. What we have is just 1 up day, 3 down days, in this range, say under 15, let's call it. So just keep an eye on that. I think that's just kind of a rule of thumb, maybe. The euro is still doing what it's doing. I think you look at, what's going on here. We held last month's high volume area. We continue to do so. Pretty good volume here today. But what you want to see on the euro is a push up towards 125. Until we get that, not that you can play both sides, because maybe this is the time that just keeps going. But, the sellers are a part of this too. However, right now the opportunity is being long, hopefully around 123 or so, for longer term players. All right, just to show you the dollar rolling over from these levels. We talked about this. We're rolling over from these levels. Can't hold the point of control for the month. It looks like this wants to flush some more, which means I think you can look for higher prices in equities, at least a day or two maybe. We'll have to wait and see. We'll go with tomorrow. You look for a little bit of follow through tomorrow, but realize the potential for longs to take some profits, and going into the weekend, I think that's just something that you want to be aware of. Okay. Apple didn't make new highs today. Just hanging out at the top end of this range. I didn't do anything with Apple today. Same position, just long some shares, no option position in it. I did say last night I did have a short in Apple that lasted about 10 minutes this morning, and I ditched it for a very small loss. Had a chance for a profit, but you know, I guess lazy, just bad discipline. Should have taken it off. But I was waiting to see, would the market push a little bit lower? And obviously when I saw it didn't, I got out of it as quick as I could. ConocoPhillips, nothing changes here. If you took the hedge with me, which was selling 55 calls, buying 57 half calls, you either have shares that are going to be called away, or you're in a losing hedge position. That's for sure. The idea of this was to have protection above 55, or I should say below 55, and realizing you're giving up some upside. So that call spread sold it for, I think, like 60 or 70 cents. I don't know the exact price. So I gave up some upside on some of my Conoco, but I'm okay with getting called away. It lightens me up a little bit cash-wise, and that's kind of what I want with the S&P at these levels. All right, we'll look at Dow. Did good today. We bought, or at least I did, on, let's get it over here. Let me get rid of all these drawings. Okay, on this day, Tuesday, bought the 30, right here, by 32, way up here. Oh, crap. Let's try this again. By 32, call spread. Expiring in September, and the reason why I chose 30 by 32 is because 30 was the next highest number, and I usually go slightly out of the money for better potential percentage gains, usually a better risk reward. And if it's going to go, I'm not going too far out of the box. I'm not buying 31 by 33, which would cost less, and your percentage gain would be bigger if it went up to 33. But I just want to get a base hit here up to June's point of control, swing highs in July, excuse me. So that's all I'm looking for. We have a little bit of resistance here, but that's kind of what you expect. But the thesis of this trade was a higher low off of last month's value area and this high volume area down here. That's the thesis. That's the trade. Got in right on this bar, and so far so good. That spread, 30 by 32, is up probably around 40-45%. I knew it was up 50% at one point today, but I got rid of it. Excuse me. I shut down my platform towards the end of the day, and didn't see exactly where it closed, but I see it closed a little lower percentage-wise. Anyways, I digress completely, and I'm sorry for that. Freeport, we took profits on this bar. We entered 36 by 34 put spread. Where does price come to? The value area, the 144 EMA, this high volume area, and then we get a U-turn bar right here off of value area. So we got a value area fill. Why should we expect more when the market's still pretty strong? So what I did was I covered. Once I saw the buyers were coming in, we had some buying tails here and then a reversal. And sure enough, that was a good cover. What did I do today? I shorted Freeport-McMoRan just above these levels, so I'm slightly in the green, but nothing to write home about. But basically, my thesis is, let's say the market takes a breather. I can have my stop fairly tight, call it 35.60, not even 1%. And, maybe we fail from this point of control for the month. Maybe we have a big down day on Freeport tomorrow. I don't know. But what it does is it protects some of my longs, and that's what I want. And Freeport worked. Earlier we had a big flush. You would expect maybe a lower high here. We'll have to wait and see. Maybe it does nothing. What I'll probably do before the weekend, and I'll tell you via Twitter, I may scale down on this position some, just so I'm not overexposed. All right, Bristol Myers. This trade, it was pushing 32 today, got above it. You can see this high volume area here. We defined it. It's a little bit of resistance. I see that, but I still think this is something that you can hold on to. I'm looking at 3170. All right, there we go. 3170 or so as a potential stop. 3168. Basically, was support, bam, flush, immediately back up, and now it's support again. We'll see if it can hold. But what you're ultimately looking for is for Bristol Myers to break out of this right here and push towards 3250 to 3260. New position today, Las Vegas Sands. This one worked out awesome. It's up 50% right now. What we did on this bar, and I announced it immediately, on this bar, it was before this bar closed too, bought the 40 by 42 call spread for 75 cents or so. So essentially I can almost triple my money in 8 days. It's for next Friday's expiration. And, I like that. And it barely has to go any higher. Last month's value area high. It looks like that is, without a doubt going to happen. The only thing you can say is you have, potential double top here. I wouldn't put too much into that, only because we have been consolidating for 2 months. This has been a huge high volume area, or huge price level. And look at what's happening right off of that level. Huge 2-bar buying, nice follow through, didn't give any of it back. So we'll see if this can continue. If it does, this spread's going to work out and you're going to make a nice amount of money. So hopefully you took the trade. That's really gold. Love how this traded today. Thought about lightening up my hedge down here or initiating some type of trade to the upside. I didn't. It was before the rally here. Excuse me, I had a phone call. And what we're doing now is holding the point of control here for the current month. Also the point of control for the last 90 days. So this looks bullish within the next maybe week or so. I don't see why not. And your first target would be up towards 1640, 1644. And then from there, this could turn into a nice trade. And I think that you can be a part of it. One way I'd be looking at it is using the GLD and buying like the 157 by 160 call spread. And, one that expires, I would say go with September. Give yourself a little bit of time. But if you get more strength on gold, you would be anticipating a breakout because we didn't buy it down here. But I think it's a pretty good shot. And, we'll have to wait and see. One thing I would wait for is, if you're not buying here, which I think right here is the better level to buy. And the reason why is because I think you can keep your stop right below here and call it a cheap shot. And if you get stopped out, it's okay. But what you'd be looking for if you bought here is a push up towards 1628. Either no selling, where it just continues, or light selling, where it does, it's not really going anywhere. The last thing you want to see are big selling bars like this, because usually it represents some type of point in the gold market and whatever market that, it's going to take a pause, it's going to revert to the mean, whatever. But yeah, I would be expecting a potential breakout. Silver, same thing. Just let it do what it's going to do. If it's going to work, it's going to work. Oil, I think I said, well, we broke up into new highs, but it looks like this point of control here, without a doubt, price is going to it. You got another dollar in oil. I mean, if you really want to play that, I would buy 35 by 36 call spread or something in USO, 36 by 37. But realizing you probably won't get that full spread, and your job is to take profits at 36.42 or so on USO. Really, that's all I wanted to say. Let the market do what it's going to do, and if it wants to do this, trickle higher effect, rally higher, let it do it. Be a part of it. And only when the market starts to tell you that it's right to look for selling opportunities. For example, in Freeport the other day, you got a double top / lower high on good volume. That's a good short. Ride it down to the value area low and look to cover the position on, when the market tells you to. Here, you get a U-turn off of the point of control for the month. Will it work? I don't know. It's a bit aggressive. It's expecting that you're going to see this effect or something similar. But I think it's a cheap shot, and I think it's a good way to hedge the portfolio, which is my biggest concern. So anyways, take care, have a good night, and I'll talk to you tomorrow.